Hi, and a big welcome back to the channel today, and happy new year to you all. Happy 2022. I'd love to say that we're going to see an amazing this year in 2022 with huge financial growth, but today's video I may explain a different approach to that overall. And thank you so much for all of your messages over the last couple of weeks. If you aren't aware, I've been very sick for the last couple of weeks. So over Christmas and New Year, someone gave me the flu and it completely wiped me out. So that's why you've only seen one or two pre-recorded videos from me, because I just was not able to do any videos. So I'm feeling a little bit better now. So I'm back in the studio ready to record and make some fantastic videos for you this year. Also, just to update you, I'm going to be moving house. So I'm going to be moving out of the UK at the end of this month, and I'll keep you updated on that as well. So let's get into today's video then, and let's talk about some of the things that are going to occur in 2022. Now, I want to begin by talking about a story that's been going around for the last week and a half now, maybe 2 weeks, and that is talking about the global GDP, so the global gross domestic product of the world, and how it's booming right now, and we're going to hit 100 trillion this year in 2022. So of course all the media outlets and news outlets and governments are running with this story as if it is a huge achievement for the world. But actually I would say that they are misguided, or at worst they are lying. Now let me give you an example here, and you'll see this in complete common sense why this is not true and why GDP cannot possibly have grown this much over the last year. Now, I want to give you an example of, say, a factory, because everyone understands how a factory works. So let's say 2019, the factory was running at full capacity and they produced 100 units, whatever that means to you. So 100 units in 2019 because they were running at full steam. And then in 2020, because of the lockdowns and the crisis, the factory had to either close or slow production. 2021, again, with new variants and everything going around, again, production had to slow. And now they're going to reopen again in 2022. So think of it like this. How is it that when this whole crisis kicked off and then we had the stock market crash in March of 2020, how is it that GDP dropped, and of course everything else dropped with it, and then it recovered, so it dropped 10% or so, recovered 10% or so? How could it have done that? And then from that point, with all of these lockdowns and slowdowns, how could it have then grown 5, 6, 7, 8%? How could that be possible if it was running at 100% in 2019 and then we had slowdowns in the years afterwards? It can't, it's not possible. So now let's think about GDP, and they're talking about this big growth and how everyone's going to be richer in 2022. I'm going to tell you that is not true, it's not accurate. And the reason they're talking about this huge growth in GDP is because they are thinking that GDP is measured in terms of, let's say, dollars or pounds or euros, and that this means it's more successful. This is inaccurate. It's very sloppy thinking, because what else has happened in the last couple of years, the governments and the central banks have created all of this new currency. What does new currency do when it's put against goods and services already in existence? Well, if you have more chasing the same or less, it pushes up these prices. So this is another reason for the inflation. Again, I was talking about the supply chain issues and how they would create this huge inflation in 2021. And of course, we saw some of that did help to increase inflation. Now the media are behind. They're saying, oh, we're going to see a little bit more inflation in 2022 as a result of the supply chains. No, the supply chain inflation has mainly passed now. It's mainly gone through. Again, they're so far behind on all this. The inflation this year will come as a result of producer inflation, or we could say raw materials inflation, where all the raw materials now cost a lot more coming into the economy. This will then be passed on to wholesalers and then to consumers. So you're going to see a lot more inflation yet to come. Hi, thank you so much for watching my video today. Could you do me a quick favor? Just click the like button for me. It just helps my video to get ranked. And why not subscribe if you're not already subscribed to the channel? Thank you. So really what they've got wrong about GDP is that the reason GDP growth isn't growing the way they think it is because it's based on currency. That's how they're measuring GDP. They're measuring all the goods and services, and then they're looking at the monetary amount next to those goods and services, and they're saying, wow, $100 trillion a year, and look at this growth, 6, 7, 8% growth this year. That is not accurate. It is simply that the currency supply has increased so much that it's fooling them into thinking that GDP is growing. So this brings us on to asset prices and what they might do this year. Well, I'm going to talk specifically about the USA, the Federal Reserve, and that is that quantitative easing, so asset purchases, bond purchases, etc., are going to reduce as I forecast last year. Now they are happening, it's going to be reducing, and it's going to be ending in March of this year. Now you remember, it was only a couple months back I said look out for March of 2022. Because certain people, certain politicians, Pelosi, etc., some of the big politicians, some of the best stock traders in the world right now, we know why, are having all these option contracts coming to an end around March and April time. Now, why do you think that is? I think they're aware of something that's going to occur in March of this year. Now, again, I'm not saying this for certain. This isn't financial advice. You shouldn't go off and, sell every asset you own, your portfolio. I'm just saying to look at this for yourself and monitor it, because something bad could happen to the stock market by or in or just after March of 2022. Because when you have asset purchases coming down, you drain liquidity. And when you drain liquidity, and we're in a credit-based system where all the growth is as a result of new credit, if you haven't got the new credit, how are you going to get the new growth? Do you really believe the GDP stats? No, we've just demolished that straight away. So therefore, we need growth from somewhere else. Where's it going to come from? Is there more demand? Again, I would say no. There's just more credit creation. Added on top of this, we may see some interest rate rises. I think we're probably going to see a minimum of 25 basis point rise. So that's 0.25% rises in interest rates. That's the base rate in 2022. We may even see a fourth, meaning we could see 1% interest rate rises. Again, I'm not as alarmist as a lot of forecasters who think, oh, this could, crash all the markets. 1% isn't enough to crash everything, housing markets, stock markets, etc. But when you combine it with the asset purchases being tapered down, that does give a lot of alarm bells for asset prices. There's another indicator which I warned you about probably 18 months ago now, and that is when credit creation drops below around 2%, we tend to go into recessions. Now, it's not a certainty, but the last 6, 7, 8 times this has happened, we've fallen into another recession. So this is another forecast I have for this year. Look out for a recession. I'm not saying for definite it'll come in 2022, but I do think it's quite likely alongside asset price falls. But if it doesn't come in 2022, I think it's a lot more likely, highly likely to come in 2023. But I would plan now for reduced asset prices in 2022. So to summarize then, the stock market may start to reduce this year. Look out for March time onwards. And what will happen once the stock market starts to reduce is you'll probably see liquidity draining out of other markets. So just look at what happened a couple of days ago with the stock market dropping a little bit. What did it do to cryptocurrency at a time that other things were going on in Kazakhstan, where they mine a lot of Bitcoin and crypto and everything else? You saw the crypto market drain significantly within 24 hours. I think that could happen again if the stock market starts to crash. I think that commodities and other assets again will get pulled down with them before we would see a recovery in precious metals and some other commodities. So that's just a quick summary of some of the things that I see that could occur this year, especially around March of 2022. I'm not saying for definite, but just to look out for that date. And if you have done really well with a lot of your positions, whatever you've invested in this year, or last year, the year before, should we say, if you've done really well and you've been thinking about liquidating, going to a little bit more of a cash position, or sort of diversifying into some precious metals or some other sort of asset that you think you would like to purchase this year, now leading up to March time could be a good time for you to look at your positions there. You'll never go broke by taking profits and taking cash. So that's definitely something I would be looking into right now before we get into the springtime. Thank you so much for watching this video today. I really appreciate it. Please subscribe if you haven't already. Click the like button. I'll see you next time. Take care. God bless.